Welcome back to Simon Says. I'm Scott Simon, and I hope you enjoyed our episode with Dale Forbes talking about fake news. And we're going to have an update on that in a little more than a week when we talk with Jeff Riggles, who's the online editor for the newspapers in Madison, Wisconsin. He's a veteran journalist. We'll talk about online journalism and the effect it has on the American public. That's coming up toward the end of the month here on Simon Says. But today, we're going to address something that, well, it arose a couple of weeks ago when Nike announced it had signed Colin Kaepernick as one of its spokespersons. And it caused quite a controversy, especially with those who are against protesting the American flag, saying they would boycott Nike. Now, we've seen these boycotts in the past, and the question always comes up, do these boycotts work or do they not work? And today's episode is Nike boycott. Is it believable or is it BS? So we bring back Rob Plaza. He's a senior vice president with Key Private Bank. He's headquartered in Cleveland, and his job is to oversee the research of investments, portfolios, publicly traded companies. He has seen this in the past. So, Rob, I'm going to ask you the question based on the evidence that you've seen of Nike reports on their income, revenue, whatever, after a couple of weeks. Is this Nike boycott believable or is it BS?
I'm going to go with BS, since those are my only two choices. We haven't had, Nike hasn't reported anything yet. It was after their fiscal quarter had ended, so even when they report earnings, which I think is Thursday next week, the 27th, somewhere around there, they're not going to have any impact on those numbers. They might add some color. Management might talk about trends during the current quarter, but the only data point we really have from Nike is its stock price. Stock price initially sold off more than 3%, but since then it's recovered and it's trading at an all-time high as of yesterday. I don't have a quote right in front of me. So initial reaction, negative, pricing in, fear of the boycott could be real. What consumers, not only in the U.S. but around the globe, think about it. And since that time, investors have said, you know what, we don't think it's going to be that big of a deal.
Could the downturn in the Nike stock 2 weeks ago, right after Nike's announcement, could it be also attributed to just a downturn in that sector? You could have, you have seen it and I've seen it, companies reporting great earnings, but somebody else in the sector did something and the whole sector went down. Could their drop right after the announcement be attributed in any way to the sector being down a little bit?
Yeah, it was part of, all the apparel stocks, a lot of consumer discretionary retail type names had been selling off, not for months or even weeks, but maybe about 10 or 12 trading days, because we had such a nice run up. Market was pausing, and the stock was trading down ahead of that announcement. So when the announcement came out, it just added a little more fuel to the selling fire, as it were. But given how quickly the stock has rebounded, along with the rest of the market, it's hard to say beyond that initial, that one-day sell-off, how much impact.
Now you've seen
the boycott, and the boycott and what the announcement had on Nike's business.
Now you've seen other companies that have been targeted of boycotts in the past. You don't have to give a specific company, but set our audience straight about boycotts in terms of the financial position of a short-term loss against the big-term picture of an overall revenue in a quarter. I don't think people realize this, but most of the time, the shortfall of revenue from a boycott is like the size of a pinhead compared to an ocean, right?
Yeah, depending on what's the cause of the boycott. And in Nike's case, they didn't have to do this. This is something that they decided that this is a position they want to take. This is the athlete or former athlete that they want representing. They want that point of view to go out there. And basically what they're saying is we're betting on the core customer, the core consumer that we want. This shares their belief system as well. And the people who would line up to say, well, I'm never going to buy Nike again, or I'm going to throw away or burn my old Nike clothes, isn't a big enough part of their customer mix, and that it's not going to impact those results. So 2 points. One, boycott, very short-lived, especially if there's really no legs to it. And then second, if you're making a bet on Nike's making a bet on that consumer, having the same beliefs as what they do with using Kaepernick as a spokesperson.
Yeah, we need to set listeners straight, because there are just too many that just get fake news from the internet saying that Nike signed Colin Kaepernick in order to draw customers. I don't think any major company, publicly traded, ever really sits in a board and say, let's do something this controversial so that in the long run we can draw customers. It's just way too risky, isn't it?
It is, and I mean that was reflected in the initial sell-off, because even if you have no position, you're just focused on the numbers and what the stock price is going to do. You don't want a company to take on any kind of risk. You don't want to alienate any potential customer. So for Nike to do that, it is a risk, but it's one that they think will pay off given the demographics, given the just the small percentage of their sales that go to the demographic that was really ticked off by what Kaepernick represents.
Rob, let's talk about Nike as a whole today in 2018. It's a different company than it was, say, even just 5 years ago. What is it that Nike is attempting to do as a company as a whole? And now, okay, they're selling apparel, they're selling shoes, they're selling their brand. But as you look at this company, and it's a publicly traded company, and your job is to give the best advice to people like me and our audience, hey, you should invest in Nike because you'll make money doing so, or don't invest in Nike because they're doing this and you'll lose money. What is Nike's position today in the global marketplace that's positive for us as investors and negative for us as investors?
Sure. So they are the dominant sport apparel brand in the world. The U.S., obviously, where they're based, is the core of their business today, but the fastest-growing areas, geographically speaking, are outside the U.S. It's especially in Asia, in China. Some markets within the U.S. growing much faster than others, but those tend to be more urban areas as opposed to, what you call flyover country. And I would say the reason that you would buy Nike is that they are excellent at managing their brand. They understand how valuable it is, and they know how to extract as much value from that brand as possible, whether it's providing uniforms to major sporting leagues like the NBA and now the NFL, FIFA, soccer around the globe, and getting out there and just representing being represented by athletes, not just Colin Kaepernick, but Michael Jordan, LeBron James, players who are at the peak of their respective sports. And also, in addition to the marketing, they're probably the best in terms of manufacturing now. Everybody thinks of Nike as taking a $10 shoe. It costs them $10 to make the shoe. It's put together, with wages in a third world country where they're making 10 cents an hour and putting it together. That was an accurate picture 20 years ago, 15 years ago, maybe even 10. But they've invested a great deal of money in modernizing manufacturing operations, reducing the supply chain, the time that it takes to go from designing a shoe, manufacturing it, and getting it to a customer. And then over the last few years, their focus has been to stop emphasizing sales through like a Foot Locker or a department store and selling on their website and through Nike-owned stores. So their profit margins have just gone through the roof compared to where it was, 10 years ago.
Even spending more money.
Oh yeah, because they when you invest in the manufacturing process, it costs a lot up front, but then as you grow to scale, which they're already at, the first shoe might cost, just throwing out a number, $1 million, but then that second shoe costs $3, and then so your marginal cost is so cheap that you're able to expand your gross margin, and that's really where they had struggled before. Their operating costs are largely advertising, and that's very cyclical depending on the Olympics or FIFA, those every 2 or 4 year global sporting events. They really ramp up advertising during those areas. But during a normal, non-world sporting event year, they pull back on the advertising, and the margins are able to expand. Selling directly to consumers is much more profitable because you're a retailer where margins might be twice as high as they are for a wholesaler, where you're selling into a Foot Locker or to a Macy's or a Kohl's or whatever store is selling your goods.
We're talking with Rob Plaza about Nike and the boycott issue that was raised 2 weeks ago. We'll talk more about Nike and the issue in just a moment, but first we're going to hear from our sponsor, doTERRA Essential Oils. Your wellness consultants are Jay and Kathy Kirsting. I have personal experience myself with doTERRA Essential Oils. Last year I was stricken with a heart attack, ended up in a hospital for a month and a half, and when I came out of a coma, I was groggy, I wasn't alert, and Jay Kirsting brought by a vial of wild orange essential oil from doTERRA. And day by day, I could see that I was becoming more alert. And it really did work. And it worked for Jay. That's how he got to be a doTERRA Essential Oils consultant. Here's his story about what doTERRA Essential Oils did for him.
I got involved because I was having a real issue, and this may surprise some. I've spent a number of years in broadcasting, and I was under so much stress that I was unable to speak almost nonstop. That was me. I couldn't get a thought out. My wife reached out to a friend of ours and said, Stephanie, maybe you've got something. Let's try it. She presented us with this essential oil called Balance. And all this one I did was I rubbed it on my hands and I inhaled it. So I would just put my hands over my nose and I would inhale it. And within a couple of days, I was back to speaking normally again.
So we're coming up on the holiday season. If you're looking for a great gift idea for someone, contact Jay and Kathy Kirsting for doTERRA Essential Oils. You can go to their website, jkirsting.com, and there's a link there to their doTERRA products. There's many of them to choose from. Take your time and get something for yourself. After all, if you're happy, everyone else is happy. Welcome back to Simon Says. I'm Scott Simon with Rob Plaza, who's a senior vice president at Keefe Private Bank, headquartered in Cleveland. He supervises the research and analysis of publicly traded companies, recommending to us whether we should buy them or not. The issue is the Nike boycott because of Colin Kaepernick. Is it reality or is it BS? Rob, you mentioned before the commercial that Nike is easily number one in its sector, apparels, athletic shoes. Let's say, and we don't have to name a specific company, but let's say, let's put it this way. Let's say Nike was third or fourth in its sector. Would they be as apt to sign Colin Kaepernick to be a spokesman for the company? In other words, is Nike big enough where it can do something like this and survive any fallout, if there may be any?
That's a good question. I think given the management team that they had, in the 60s and 70s, the founder and Phil Knight, very, very progressive type management, not only business-wise but politically. So yeah, I could see them taking that chance if you were to fast forward that and they were only a much smaller company.
Okay.
Because I think what we've learned through the Donald Trump success, it's not that you want to appeal to everybody, because if you try to do that, you're not going to make anybody happy. So what you want to do is you find out what your core base, the people who are really with you, and you just want to go deeper and deeper, get deeper and deeper entrenched in giving that political base, customer base, what they want. And I think that's what you see Nike following that playbook.
So in other words, what you're telling us is it's the Nike culture. This is what we do. If you like it, great. If you don't like it, it's your choice whether to buy our products or not. Correct?
Yes, correct.
Okay. That's pretty easy to understand. The reason why I asked that question is because I have a friend that I used to interview daily years ago. He is a stock market analyst, and he's a really good one. His name's Rob Black. He's in San Francisco. He's on the radio there. I can't remember the radio station. And he always had this advice for investors, for people buying stock, whether themselves or through or whatever. He said, you never go wrong buying the top two companies in a particular sector. They're there for a reason. They're there because they're successful, making money. They make good decisions over the long run. And so I'll ask you, is that a tried and true practice that everyone should utilize?
It's a good rule of thumb. I think given the amount of data that we now have available to analyze, I mean, I know you're a handicapper and your sports stats as well as your trivia, but there's mounds and mounds of data that you can have on publicly traded companies, and typically your top performers in whatever industry you're looking at are what we call nowadays high quality companies. They give you consistent growth, they have consistent sales, they continue to find ways to grow their markets without hurting margins, and then they go through cost cutting so they can expand those profit margins. So yeah, basically what he's been saying for all those years is correct, and we have quantitative evidence to back that up now.
Well, I totally agree with you. If I had to go through the data that you go through researching these companies, I'd get a headache, and that's why we have to rely on your guidance and your expertise and your success in the business. I mean, when I take a look at I'll tell you, Rob, if you want to know the Scott Simon success in stocks, take a look at the companies that have high dividend yields, and if they have high dividend yields, they're automatically going to the top of my interest list. I've always practiced it, and it's always been successful, because even the companies that they pay high dividend yields, well, they're making the profit margin in order to pay me more money. Correct?
Yes, and they're not taking that cash and investing it in silly projects or overpaying their management. They're sharing it with their shareholders. They're returning that cash. And if you're able to take that income and reinvest it into the stocks that you own, then it ends up even, it's like compound interest. You're compounding those dividends, and that's how you really, over several years and decades is how the individual investor ends up beating the market and beating professionals, because you have that long time horizon, and you're in, like you said, those higher quality companies with the ability to pay attractive dividends.
So let's end this episode by closing out about Nike. We talked a little bit about the Colin Kaepernick issue. Let's just set that aside. From your chair, Senior Vice President, Key Private Bank, you look at Nike stock, you look at their performance quarter after quarter. Tell us investors what you recommend to us about Nike.
You put me on the spot. That'll get me in trouble with my employer if I make a specific recommendation.
Okay, all right. I apologize for that. Let's just summarize the things that we should like when we make a decision to buy Nike or not. Things that will be valuable to us.
Well, what you said a little bit earlier about being a number one or number two company in its industry, and it's a global leader. It has a global brand, and it's really hard to go wrong with those names. And I would classify Nike in with a McDonald's or Coca-Cola. Basically, the company that you're buying today is going to look very similar in 10 years or 20 years, in that they'll be selling apparel. They'll be number one, number two in that business. They have a smart enough management team where they're going to be able to adjust and adapt along the way. So it's a pretty good place to park your money over a long period of time.
And so when Colin Kaepernick raises his head involving an issue like Nike, we should all just take it with a grain of salt, correct? Or should we at least examine it, not in terms of position of the with Nike, but just the message he has?
So this is a lesson that everybody should take away, is you should ignore politics when you're making investments, because the stock prices always end up ignoring politics. They just focus on the fundamentals and growth in sales and growth in profit.
What a great answer, because, folks, you're hearing from Rob Plaza, who, well, he admitted in his previous episode with us about talking about the GDP report of 4.1%. By the way, Rob, that was a well-received episode. We got a lot of listeners for that, and that was great. But as you said on there, you are not a big fan of Donald Trump himself, but you're a big fan of his policies.
Economic policy.
Right. Yeah. Economic policies. And we're probably coming up to a GDP report down the road. We do want to talk with you about that. Just one last quick question. 4.1% GDP growth. Can we sustain it, do you think?
Yeah, so I believe I mentioned the GDP Now forecast from the Atlanta Fed. And I checked it earlier this week, and it was right around 4.3, 4.4%. So Q3 looks pretty good.
Wow. That's excellent. Well, Rob, thank you for setting us straight about Nike, the Colin Kaepernick issue, and really what it means in the long run. Too many people saying, well, if Nike does this, they're going out of business. And like you said, they are at the top of their sector. And like you just said, they're going to look like the same company 10 years from now that they are now, and they're very successful. Rob, thanks for being with us. We appreciate you talking about this issue because we don't hear from anyone else really talking about the real effect that this story has. Thank you so much.
Thanks for having me.
Rob Plaza, Senior Vice President of Key Private Bank. We hope you've enjoyed this episode. We try to pick topics that mainstream media won't pick, won't get into, and we try to select interview subjects that will tell a true story, not a fake story. And I have seen people on the internet saying, this will really hurt Nike, people will be late, and it's just fake news. And that's also something that we'll be tackling not just through the end of this year, but continually. We want to bring the real story to people so that you're educated and you're well informed, and so that you can live life and make decisions that are well informed and beneficial. So, Rob Plaza, thank you. I'm Scott Simon for Simon Says, and thank you to doTERRA Essential Oils for being our sponsor.